In a strategic move aimed at catering to the evolving landscape of fixed-income investments, Amplify Investments has partnered with Samsung's asset management division to introduce the Amplify Samsung SOFR ETF. This innovative exchange-traded fund, launched on Wednesday, is making waves as the first-ever ETF to track the Secured Overnight Financing Rate (SOFR), the U.S.'s new benchmark for overnight interbank lending rates. Background information. The SOFR, positioned as the successor to the obsolete LIBOR gauge, has gained prominence as a reliable indicator of overnight borrowing interest costs. This groundbreaking ETF launch aligns with a broader trend in the market, where there is a growing enthusiasm for ultra-short-term fixed-income products. This surge is notably attributed to the recent spike in yields across the fixed-income spectrum, driven by the Federal Reserve's aggressive rate hiking cycle. Market reactions and comments. Market reactions to the launch of the Amplify Samsung SOFR ETF have been met with a blend of enthusiasm and strategic interest. Bill Belden, president of Amplify, pointed out that the market's evolving priorities are evident in the newfound focus on rate-driven products, emphasizing that this shift has particularly manifested in the current year. This underscores a broader recognition within the financial industry of the unique advantages and opportunities presented by investment instruments linked to interest rates. Matthew Bartolini, head of product research at State Street Global's SPDR Americas ETF division, offered additional insights, highlighting the substantial inflows into money market and ultra-short-term products. These categories, known for their sensitivity to short-term interest rates, have captured significant attention, constituting approximately 36% of the total fixed-income ETF inflows over the course of the year. Bartolini's observations provide a nuanced perspective on investor preferences, indicating a heightened demand for instruments that navigate the complexities of the current interest rate environment. Moreover, the increased interest in ultra-short-term fixed-income ETFs aligns with the broader market trend marked by rising yields across various fixed-income products. This surge is a direct consequence of the Federal Reserve's proactive approach to interest rate adjustments, prompting investors to explore alternatives that can offer competitive returns while managing potential risks associated with interest rate volatility. In essence, the market reactions and comments underscore a strategic shift in investor behavior, with a notable focus on rate-driven products and a recognition of the unique advantages offered by the Amplify Samsung SOFR ETF in navigating the evolving financial landscape. Market insights. The Amplify Samsung SOFR ETF stands out in the market by directly addressing a key concern for investors: duration risk. This ETF is strategically designed to provide investors with exposure to overnight lending rates, presenting a distinctive approach that mitigates the inherent volatility associated with rapid changes in interest rates. This characteristic is particularly valuable for investors looking to navigate the intricacies of the current financial landscape while optimizing their risk-adjusted returns. One of the primary advantages of the Amplify Samsung SOFR ETF is its short-term nature, which acts as a safeguard against the perils of duration risk. Given the inherent unpredictability in interest rate movements, the ETF's focus on overnight lending rates ensures that investors are less exposed to prolonged fluctuations that could potentially erode their income. This targeted approach aligns with the growing demand for investment solutions that balance the pursuit of attractive yields with risk mitigation strategies. As of the latest data, SOFR is yielding approximately 5.32%. This competitive yield is a noteworthy aspect that significantly enhances the appeal of the Amplify Samsung SOFR ETF in the eyes of investors. In the current market environment, where achieving favorable returns poses a challenge, a yield of this magnitude positions the ETF as an attractive investment opportunity. Furthermore, Amplify has demonstrated a commitment to providing a cost-effective investment vehicle for income-seeking investors. With the fund's fees set at 20 basis points, the ETF offers an economically viable option for those looking to gain exposure to short-term fixed income with minimized risk. This fee structure not only enhances the overall attractiveness of the Amplify Samsung SOFR ETF, but also reflects a strategic understanding of investors' preferences for efficient and transparent investment solutions. Strategic value to investors. The infusion of a substantial $50 million seed capital from a large institutional investor into the Amplify Samsung SOFR ETF is not merely a financial transaction. It serves as a resounding endorsement of the ETF's strategic value and potential within the investment landscape. While the identity of this institutional investor is confidential, the sheer magnitude of the investment speaks volumes about the confidence placed in the Amplify Samsung SOFR ETF and its ability to deliver compelling returns in a dynamic market. This strategic move holds multifaceted significance for individual investors seeking to refine their portfolio strategies. Firstly, the sizable investment signals a high level of conviction from an institutional perspective. Institutions, often regarded as astute market participants, conduct thorough due diligence before committing substantial capital. The endorsement of the Amplify Samsung SOFR ETF by a large institutional player suggests that sophisticated investors recognize the unique value proposition and potential of this investment vehicle. Secondly, the injection of such significant seed capital is likely to contribute to the liquidity and overall market depth of the ETF. This enhanced liquidity can be advantageous for individual investors, providing them with more efficient entry and exit points. Additionally, increased liquidity often correlates with tighter bid-ask spreads, potentially reducing transaction costs for investors looking to buy or sell shares of the ETF. Moreover, the strategic value embedded in this endorsement extends beyond the financial aspect. It prompts a re-evaluation and reassessment of investment strategies among a broader investor base. The confidence demonstrated by the institutional investor can trigger a domino effect, encouraging other investors to consider the Amplify Samsung SOFR ETF as a viable component within their portfolios. The visibility and credibility garnered from such an endorsement create a ripple effect in the market, fostering a deeper understanding and appreciation of the ETF's strategic relevance. For individual investors, this endorsement invites a closer examination of their own investment objectives and risk tolerance. It prompts a consideration of whether their current portfolio aligns with the strategic moves being made by institutional investors. The backing of the Amplify Samsung SOFR ETF becomes not just a financial investment but a catalyst for reflective decision-making, urging investors to assess how this strategic move fits into their broader investment thesis and goals. In summary, the substantial seed capital injection from a large institutional investor into the Amplify Samsung SOFR ETF serves as a strategic compass for individual investors. It signals a broader shift in market sentiment and prompts a thoughtful reassessment of portfolio strategies, encouraging investors to delve deeper into the potential benefits and implications of incorporating this innovative ETF into their own investment frameworks.